Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for September 9th, 2018. Hope you guys and gals are having a great weekend. Before we get into what we're going to be looking at in the upcoming week as far as the market goes, I want to mention if you haven't tried ForexAnalytix, make sure you do so. It's only $1 for 10 days. $1 for 10 days. You can see all of our pricing right here on our website for the different tiers, different layers that we have based on the analysis you want. But once you try out ForexAnalytix, make sure you download the mobile app, whether it's on the App Store or the Google Play Store for your tablet or your mobile device. So this way you have all of our new analysis as it gets pushed through the system throughout the course of the day. You get it instantaneously on your mobile device. So that's really awesome if you do that. And then also, I have to mention this, we have a brand new chat room that was developed by Steve and his technology team, and it is awesome. It was built from scratch. Really proud of what we have here. It's really cool being able to chat with everybody in our community, and also, like, let's say you want to search for something specifically from Blaker. Oh, there's Blaker right there. Or let's say you want to search for something that Steve wrote. You can see all the different mentions for Steve, and uploading charts and having emojis and being able to have discussions with the whole community is awesome. So make sure you check out our new chat room. Now let's talk about the week ahead. Now, we got through Friday, and actually, what I should do is I'm going to take a step back, and I'm going to take a step back into last week. So the dollar has been, and if you've listened to our daily free webinars, our face webinars, I'd mentioned that the dollar is extremely choppy, and I really don't have a clear-cut direction of which way I think the dollar is going to go. I mean, we had, you can see here, this is just the euro dollar from the daily chart. We had an inverted head and shoulder pattern here, with the head being right here. We didn't follow through as we stopped at this this trend line right over here around 117. Now we're developing another head and shoulder pattern, which could take us down to 113. You can see the shoulder head take us down to 113. But at the same time, we got past non-farm payroll on Friday, and the dollar did strengthen going into Friday, and you can see we're approaching this neckline on the euro dollar once again. So the dollar has kind of been very mixed, and we've had some false signals. So I'm not really too keen on getting very aggressive the dollar at this point. We might have maybe better indication as the week goes on, because on Thursday we have the ECB and the Bank of England both are meeting. Their central banks meetings are on Thursday, and even though we're not expecting either central bank to move on interest rates, we might actually get an indication from the Bank of England on maybe some future rate hikes once we get past Brexit, or how much risk Carney is seeing as a risk, Brexit risk going into the next few months. But all in all, I think we're fairly directionless as far as the dollar goes. There are certain currencies that are much clearer than others. Like, for example, you take the Aussie dollar, and with this ongoing, China trade, I'm going to be bold enough to call it a trade war at this point, with the United States initiating more tariffs. It's just weighing on the Aussie. Now we're testing a 161% extension of this last move higher that was way back at the end of the year in 2017. Is one of those moves that frankly, I couldn't understand why the Aussie was rallying the way it was rallying, and I think it was just a low liquidity environment throughout the month of December and going into January. And then now we're at 161% extension of that move. So even though we're in a downtrend, and I think selling rallies like back to 73 cents makes sense in the Aussie, it's hard for me to chase it down here. Especially with the divergent relative strength that we've been seeing. And it is bearish, but I don't know if I'd necessarily want to be long per se, but I don't know if I'd really want to be short as we're extended into this key level support. Now, the flip side to that is you look at the euro dollar. I'll take us back over to the euro once again. And the euro has this this head and shoulder pattern. So if the euro does break through, let's say 115 in the euro, which I think is going to be pretty key support on the way back down, will that drag the Aussie lower, even lower than that 161% extension? My answer to that question is, yeah, I think so. So if the euro does break down, then I think you have to just continue to be a buyer of dollars, at least against maybe currencies like the Aussie. The same could be said for the Kiwi too. I mean, the Kiwi dollar continues to bleed lower. You can see on the weekly chart we're at a new trend low here, and the Kiwi dollar looks like we could continue lower towards maybe even the 64-cent level, which would be the 161% extension of that same move that we were talking about the Aussie. The 161% extension leads us to 64 cents, and we're at 65 and change. So that could come under pressure. Now, you can't talk about the dollar without talking about the cable. And I'm actually going to take you over to my charts here on what I've been looking at with the pound, because I'm actually bullish the cable on the crosses, not necessarily against the dollar. I was having a discussion with one of my trader friends who trades more equities towards the end of the week of last week, and he was bullish the pound, and I'm like, I'd rather play the pound on the crosses, and that I was shorting the euro pound versus playing the pound dollar, which I can show you that chart here in a moment. But I'm still a little skeptical about the cable until we break above the 130.50 level. Now you can see we have this triangle consolidation in the pound, and it's consolidating between these two red lines right here. But that means that the pound could still see 128.50 before we rally. I do believe that a lot of the Brexit news is a potential no Brexit. A lot of it's priced in. Now, if a deal doesn't get done, a Brexit deal doesn't get done, the pound will come under pressure. Of course, I believe that. However, I think a lot of it is already factored into the market. It's more of if a deal gets done between the EU and the UK, the pound has a lot of room to recover. And again, do you play the cable, the pound dollar, to the long side and try to fight the bullishness of the US dollar, or do you play the pound against some other crosses where you look at let's say the euro pound, which I actually still maintain a short position. If you look at the ForexAnalytix trend indicators from a macro, candlestick, basic technical analysis, harmonic analysis, Elliott wave analysis, it's all red, and that means that through all of our different forms of analysis, we see it as being bearish. That should probably be a good indication that if you're looking at the euro pound, it's probably a better idea to be on the short side than the bullish side. That's the benefits of using ForexAnalytix, is having these trend indicators, or we call them the traffic lights, because it's telling you that all the different types of analysis, that it's telling you that we are seeing more of bearish developments. And for the way I'm looking at the euro pound, frankly, is that you can see this upsloping channel that we had here. We are breaking through it, and now that we're below 89.50, we're probably going to retest this previous channel support, which could take us all the way down to 88.50. And that's, again, I think it's a cleaner way to play the pound dollar versus playing it's a cleaner way of playing the cable, or the the pound, okay, pound currency, versus playing the pound dollar, where the dollar is more of a mixed signal, and we're not getting clear-cut indications. And if the dollar is strengthening against the market, the better trade may be the euro and not necessarily the pound. All right. A couple other things that I think we need to look at is we should look at the US dollar Canadian. We are, and probably the peso as well. We are very close to a NAFTA deal, I would assume. If you look at the bigger picture of what the US is attempting to do, in my view, and with the firm that I trade with, Gellos Capital, the gentlemen that trade over there, and other people that I have these discussions with, most of us believe that the bigger picture, the U.S. is going after China, and to form an agreement between our North America trade partners like Canada, even though Canada's giving some resistance to the NAFTA talks, ultimately I think the U.S. is probably trying to position not only North America, but a lot of Europe. By the way, there are going to be U.S.-European trade talks going into this next week, just so you all know. I think on Monday, those discussions regarding European tariffs start again on Monday, if I'm not mistaken. But I think ultimately the goal is for the U.S. to try to get everyone else to side against China. So therefore, a NAFTA deal is probably getting really close to being done. Once that happens, we heard from the Bank of Canada's Wilkins this week that the Bank of Canada is probably going to start being more aggressive as far as raising rates. So once a NAFTA deal gets done, the US dollar Canadian should continue to sell off. And I think that once we get below the 130.50 level, which would be this previous channel support, we'll probably get repriced back down towards 129, maybe even lower than that. But the one reason why the Canadian currency has been so weak is because the market is a little concerned that Canada is not going to come to the negotiating table, or they're not going to finalize a deal with the U.S. and probably Mexico as well. But I think we are getting close. And if you look at the U.S. dollar Canadian right now, the 132 level offers some near-term resistance. 133 is better resistance in my opinion. But if we do drop below, like let's say the 130.50 level, I think that exposes technically some bigger downside towards 129. I'm overall bullish the Canadian currency. I'm not long the Canadian currency. I was on Friday, but I closed that position out ahead of the weekend. But I still want to play the U.S. dollar Canadian to the downside. And one of the other problems with that is, again, going back to our earlier conversation with the dollar is it's a little mixed against other currencies. So maybe the Canadian may be better traded against other currencies, like buying the Euro Canadian or buying the Pound Canadian versus trading the U.S. dollar Canadian pair. That's an option. If you take the U.S. dollar Mexican peso, the one thing about the Mexican peso that we should note, that between this move at $21 and all the way down to like $18.50, this was a 50% retracement. When we stopped this week at I think it was 1980 off the top of my head, that was a 50% retracement in the you can see it right here. Is a 50% retracement. It's 1970, 1968. We had some, a shooting star candlestick reversed us back down towards support. The 200-day moving average resides right around 1903 or 1905. Okay, if that breaks the 200-day in the U.S. dollar Mexican peso, I think that exposes a move back down towards 1850. And again, these are levels that I'm looking at just in case, Canada and Mexico and the U.S. agree to a new NAFTA deal, maybe as early as next week. If that happens, we have to look at the downside in the U.S. dollar Mexican peso and the U.S. dollar Canadian, in my opinion. One last thing I'm going to mention, and before this video gets way too long, is the U.S. dollar Japanese yen. It's very mixed. I think it's directionless at this point. I think if you're trying to trade the U.S. dollar Japanese yen, it's a really tough trade. There's a lot of currents going in both directions, whether you're talking about rates, whether you're talking about risk appetite or risk aversion, whether you're talking about the US dollar. It's being pulled in two different directions quite aggressively with the US dollar Japanese yen. So being directional in the US dollar Japanese yen has been a really tough trade as of late, and I think that's going to continue. We might have some better indications if bonds continue to stay offered and we see rates continue to go up. That might help the dollar yen. That might give us some better direction. But for right now, this is a currency pair that I'm really not focused on. I know it's you know, so many people love to trade it, but I think from a directionality standpoint, trying to figure out if it's going up or down, it's a very tough trade right now. Guys and gals, if you like this video and you found it beneficial, make sure you click the like button on the YouTube, you know, on your YouTube platform. Click the like button, click subscribe, so this way you don't miss any of our great videos that come out throughout the course of the week if you can't listen into the free webinars, and also share it with your other trader friends. We'd appreciate that, and that all those actions really encourage us as a company to continue to deliver great technology and great content for you all to enjoy. My name is Blake Morrow. I'm with ForexAnalytix. I hope you enjoyed this video, and I hope you have a great trading week next week. And I'll see you guys on the FACE webinar first thing tomorrow morning. Thanks a lot. Have a great rest of your weekend.